Giacomo, sono molto felice che facciamo questa intervista per la rivista Bitcoin e sono felice di averti come primo ospite. Non vedo l'ora di sentire grandi idee da parte tua.
Sono felicissimo anch'io, ma è molto meglio se torniamo a parlare inglese. Grazie.
Sick burn, Giacomo.
No, actually, I mean, it was very good. It was very good. Very good pronunciation. Many people would have a worse pronunciation after many years of studying Italian. Also, it's not a very useful language because it has a very small network effect. Basically, unless you need to become a priest or pope in the Catholic Church, you don't really need it. So, it's like an altcoin without the network effect. It doesn't matter how good it is, it will never be used.
Okay, I will remember that. Though it's useful. It's very similar to classical Latin, and lots of European languages are based on that. But anyway, welcome to my first Bitcoin Magazine interview. I'm happy that I get to do this.
Very happy too. Thank you for having me
Actually,
here.
that's what I said in Italian earlier, but I guess the English-speaking audiences will not know, so I will put some subtitles at the bottom.
Also, you have to gesticulate more during the. No, I mean, I'm joking. We don't really do that.
Depends on the region, I guess. If you come from the south, they tend to be much more expressive.
Yeah, but this gesture is typically, I mean, we use it in only one situation, which is like, what the hell is this? Which is a very particular situation. And it has been extended, abstracted out as the main Italian gestures for everything, which is not.
Right. So since we last spoke, you have been up to a lot of stuff, and not all of it is according to that presentation that you have made at the Honey Badger conference, where you defined the ideology of being a Bitcoin maximalist.
Well, I context this difference between what I'm working on right now and my maximalism presentation.
So to a lot of people, if they found out that you're working on RGB tokens, they would probably say that you're like Metallica in 1991 when they released the commercial album and they were not trash metal anymore. You're like a rock star who sold out.
So first of all, when you say RGB token, we have to be very careful because somebody could think that there is an RGB token out there. So a token connected with the project RGB I was working on since a little bit more than 1 year, which is not the case. I mean, we are not selling any token. What we are doing is not scamming people, but is to enable people to scam other people using Bitcoin properly instead of using some other wrong customs or practices or protocols. So the story of RGB is basically, it goes something like this. More than 1 year ago, a client of my consulting company asked me an evaluation about their ICO project, and we gave two kinds of evaluation. One was economical about the actual mechanism of the app token that they were wanting to launch in an ICO, and it was a negative opinion about that. It was like AppCoin do not work. For anybody who is interested in my take about ICOs, I gave a speech. I think you can Google it, like ICO triangle with my name, Giacomo Zucco, and you will see my speech. And it's basically, the idea is no matter how you try to do that, tokens do not work in general. But then the second part of our output was, if you want to do a token, which will not work, I'm sorry, you shouldn't anyway rely on something like Ethereum ERC20, because it's not a long-term sustainable standard. It's terrible for privacy, terrible for scalability, terrible for security, it's terrible for a lot of things. And even if, and that's a big if, and probably it's a failed if, because we think the token model doesn't make any sense. But even if your token model makes some sense, which could in some very niche cases, then I will try to defend in a few minutes, even then, you shouldn't use anything like the Ethereum network, which doesn't make any sense. So the client, I mean, they went on to do the ICO anyway, but at least they said, if you're saying that there are better practices, better ways to tokenize stuff, to represent digital objects or digital promises for physical objects in a way which is not the typical ERC20 we are hearing about every day. Let's show us which way it's that, and we will give you some money in order to provide us with the description of the best possible way to tokenize stuff on blockchain or crypto, or as I like to say, on Bitcoin inspired or Bitcoin derived or Bitcoin leveraging systems. So we at the beginning we started to review. It was almost 2 years ago at this point, a little bit less, 1 year and a half ago. We started to review a lot of current and previous experiments like Counterparty, which is used, by the way, especially for rare papers, so for collectibles, and Omni, which is used mostly for Tether US dollars, and all the color and coin implementations, so Colu, CoinSpark, CoinPrism, ChromaWay, etc. And we tried to create some best practices around them, but we soon realized it wasn't making any sense. So the first thing that we tried to do was to move all this logic on top of Lightning Network. My reasoning was this: everything you do on the base layer on the Bitcoin blockchain shouldn't basically you shouldn't do anything there. If possible, not even moving Bitcoin, if not for let's say settlement or opening closing channel, because everything which is already bad in Bitcoin will be even worse with your token. For example, Bitcoin on chain has a pretty bad privacy and fungibility features because it's because of chain analysis, and your token on the blockchain will be even worse about that, because you will have the same traceability with a way smaller anonymity set. Then again, for example, your scalability, which is already bad in Bitcoin, will be even worse with your tokens, because, for example, you will not be able even to use the very dangerous SPV proxy of mining trust, because miners are not supposed to enforce your token rules, only the Bitcoin rules. So everything which is bad on Bitcoin is even worse with tokens. So we should do everything leveraging the layer 2. So we should assume Lightning Network as basically our starting point for asset discussion, and assets should be a layer 3 on top of Lightning Network, which is the layer 2. Then we hired for this consultancy the Bitcoin developer, the former Bitcoin developer, now Twitter personality, Peter Todd. And I mean, during a review of our work, Peter basically said this: his point was that the best model for a token, for any kind of token or asset or digital asset project somehow connected with Bitcoin, was something that he calls client-side validation approach. What is that? The idea is that instead of asking everybody to validate the passage of the asset ownership, we will ask anybody to only validate the anti-double spending feature, so basically the closing of what he calls a single-use seal, and not the actual content of the proof. So the idea is, with Bitcoin, if I want to give you a Bitcoin, I sign a transaction, a valid transaction, I send it, I broadcast it, and now miners will have to include the transaction in the blocks, and the blocks will be valid only if the transactions are valid. Otherwise, we will orphan the block. Peter started to research an alternative idea, which is basically this. When I want to send you a Bitcoin, I will sign a transaction. I will give the transaction only to you and to you only. You will be the only one verifying. Then I will take a commitment to this transaction, and I will publish it. I will give it only the commitment to miners. Miners will basically build a blockchain of commitment, but without the actual validation part. That will be only left to you. And when you will have to send this asset to somebody else, you will pass him your signature plus my signature plus the previous signature, and so on and so on. So in this way, we reach a way better scalability and a way better privacy. So there are two interesting things about this idea of client-side validation. The first is that Peter proposed that for Bitcoin, but Bitcoin is never going to, I mean, not in probably in the next decades. We will have maybe we will have a client-side validated side chain just to try. But Bitcoin as is, even if this with this architecture was actually better, Bitcoin it will remain with the global consensus architecture. So the idea was tokens, any kind of asset which is not Bitcoin, could be used as a guinea pig, as an experiment, in order to test an architecture that we cannot test directly on Bitcoin. And the second idea that immediately clicked when we discussed with Peter about that was basically this. What is the main problem of a client-side validation model? The main problem is basically that you have to be online, because I have to pass you directly proof. I'm not broadcasting the proof for everybody to keep it in the blockchain forever, which is a waste of space. I'm giving the proof to you. That means that you have to be online. You have to be able to receive something from me peer-to-peer. And also you have to somehow back up that in a way that is not just your common BIP32 seed. I mean, with your seed, you can recover your Bitcoin possessions, but you cannot recover your client-side asset possession, because you don't need just the seed. You need a backup of everything I'm passing you, which includes all the previous proofs. So the interesting thing about this is that this kind of limitations of the client-side validation idea by Peter are exactly the same limitations and problems and challenges of the Lightning Network. In the Lightning Network, you have to be online in order to receive my update of the channel, and or your watchtower has to be online instead of you in some way. And you will have to back up not just your seed, but also all the partial updates of the channels forever, basically. With L2, you can save only the last, but with the current design, you have to save and keep private all of them. So with the same kind of problems with Peter's approach, we're also basically present in Lightning Network for Bitcoin. So we built this idea, which is basically leveraging Bitcoin layer 2 Lightning Network the more it is possible, in order to move these off-chain asset proofs, and to use the Bitcoin blockchain only for what it is good for, which is anti-double spending, avoiding double spending. So I presented this idea for the first time in Lisbon, Building on Bitcoin conference 2018. Basically 1 year ago, in July, in Lisbon, I presented this idea with some preemptive excuses about why this is not so scammy as it sounds. And during this interview, probably I will have to give it another try to this kind of excuses, to see if I am able to convince you that this is not so anti-maximalist. And then after a few months of experimentation of design by mostly one developer, Alekos Filini, who is now working for Blockstream, Alekos created the first prototype of this implementation. And then during the Understanding Bitcoin conference in Malta, we had a discussion with many companies, namely Bitfinex, Poseidon, Bitrefill, Fulgur Ventures, In Bitcoin, and Chainside. So these companies, and now also Pandora's Box, these companies gathered together to sponsor the development of the production delivery of this idea. This idea is sometimes discussed as RGB, which, I mean, RGB is the spectrum, the color additive, you know, red, green, and blue. So since we were researching for colored coin in the beginning, we called it RGB. And sometimes it is discussed as spectrum, which is explicitly the Lightning Network part of RGB, because RGB asset can be sent on chain, meaning that the proof is still off chain, but the commitment is on chain, or you just use Lightning Network asset colored channels, and so everything is off chain, the proof and also the double spending prevention. So Spectrum is the proper layer 3 part of the projects, while RGB is let's say layer 2 and a half, maybe something like that. And now there is an active effort by these companies that I mentioned. Of course, some of these companies also have some use cases. For example, Tether, which is done by a company which is, as you know, connected with, heavily connected with Bitfinex, is a typical use case when they use a token. And I think it makes sense that they use a token. Most of the time when we tell people you don't need a token for that, just use Bitcoin, is because what they want to do is payment basically, or incentivization. But if what you want to do is to have some kind of technical plausible deniability about the control you have on some kind of third-party IOUs denominated in US dollars, then I think that it's pretty clever idea to leverage an external open protocol instead of using just your internal database. And I think that Omni is living is very problematic because of the things we said before, because of scalability, because of privacy. And I think that, for example, I'm very interested to see Tether US dollars with all the problematics that they can have on top of this protocol. And also, yeah, I'm talking too much, so I will leave you for the next question, and I will try to defend a little bit more my maximalist scenes.
Okay, so I feel like you have said quite a lot, and there's a lot of information to process. For anyone new who hasn't heard of colored coins, I think the idea has been around since 2013 or something, and it precedes the existence of Ethereum and ERC20. And at the time, the idea was to do it all on top of Bitcoin on the main chain, and they came to the conclusion that it's a bad idea due to the scalability limitations. And you brought it back with your consultancy firm as a way of implementing it on the second layer on Lightning. Am I right up to this point?
Mostly. I will just correct the fact that scalability is just one of the concerns. Another very big one, I want to stress that again, is privacy. Privacy for tokens is so much worse than privacy for Bitcoins on chain. And also there is another problem that I didn't mention it before, which is some kind of conflict of interest. It's connected with scalability, but it's not properly scalability. The problem of conflict of interest is this. If you want to use informations on the Bitcoin blockchain, so information which are consuming block space, in order to store data for a meta protocol, then you are creating some kind of conflict of interest between the meta protocol users and the Bitcoin users. Because, for example, when there was counterparty going on, the counterparty development, there was some kind of fight because counterparty guys, they wanted operator to be very large so that they can put a lot of metadata to be processed by counterparty. And also they wanted the fees, the Bitcoin fees, to stay very low because they needed cheap block space in order to put all the metadata inside the Bitcoin blockchain. While the typical Bitcoin node runner, the Bitcoin user, he wants the block space to be very expensive and use it properly because it doesn't want other people's protocol to free ride, to leverage in free riding their own scarce resources. So there is this conflict of interest when you use the blockchain in order to store the metadata for another system, which is something that was basically also condemning the correct coin idea and counterparty idea and Omni to irrelevance. Of course, one could object that in ERC20, these problems haven't been solved at all, and that's true. But the problem is that inside the Bitcoin circles, when something is a bad idea, smart people start to stop working on that idea. So correct coins and counterparty had these problems, and smart people stopped working on that. For example, Peter Todd, that I mentioned before, he created a Python implementation of correct coin, and then he said, okay, this is a bad idea because we're abusing on-chain space for a meta protocol. And also there is another problem connected. So this is connected to scalability, but it's not just scalability, it's a conflict. And there is a fourth problem connected with privacy, but not exactly privacy, which is censorship. So miners can censor transaction containing Bitcoin, but mostly they don't know which is which. So it's a problem, but it's a problem that we can manage so far. And we can improve with some layers of privacy. But what about if Apple company starts to issue shares on top of Bitcoin? Now, one Bitcoin transaction that it's worth a few Satoshi from the Bitcoin point of view, maybe is including some kind of huge economical value because of the collateral represented by the colored coins. So what happens if now miners start to block snipe each other because the value of the token is more than the block subsidy, or they start to censor Apple. So it creates a lot of other problems which are not there with RGB, hopefully, because with RGB, nobody looking at the blockchain can even say there is a token moving. Nobody knows, miner don't know, except you receiving the token. Nobody else even know that the token exists on chain. So that's a huge improvement.
Right. I also feel like at this point, we have to redefine the term of being a Bitcoin maximalist from the perspective of being a maximalist of the token of the Bitcoin itself, which is issued by the miners every roughly 10 minutes, and the maximalist of the Bitcoin network and the protocol, as you can build a lot of stuff on top of Bitcoin and have lots of protocols that are agnostic to whatever Bitcoin does and can be implemented on pretty much anything. But they are built on top of Bitcoin just because it's the most secure network and it guarantees this kind of transfer protection, right?
Yeah, I will not call myself a maximalist in this sense anyway, because while I think that the Bitcoin asset, in one of my presentations in Riga, not the maximalist one, but the one year before, I tried to separate two concepts. So you can have the Bitcoin asset on the Bitcoin blockchain or in other systems like side chains or even centralized database. For example, if you have a Bitcoin ETF, you have a Bitcoin asset in play, but without the Bitcoin blockchain at all. Or you can have the Bitcoin blockchain used to something which is not the Bitcoin assets, for example, tokens. So while while I think that the Bitcoin asset itself will be wildly disruptive for many economical, commercial, and financial things. So if it works properly, the Bitcoin asset on and off the Bitcoin blockchain will be highly disruptive. I'm still very skeptical that outside a few niche cases, the non-Bitcoin assets on top of the Bitcoin blockchain will prove to be extremely disruptive or long-term sustainable. So I'm still very skeptical about the use cases. I mentioned a few use cases. For example, I think that collectibles are fine if you because the collectible, well, I try to defend, if you want, a few use cases that I think are legit, even if I'm not a maximalist, because they are not big, they are not destructive, and they may not be sustainable long-term. But they could be enough right now to try some experiment. So the first would be digital collectibles. The nice thing about the collectible, which can be like a post stamp or whatever, is that even if the company issuing the collectible is gone, the collectible is still around, because it doesn't matter if the company producing the toy better if it's out of business, because now your collectible is even more scarce. So when you switch to a digital collectible, which can be a thing, the bad thing is that when the issuer of the collectible, the digital collectible, on its own database, it's out of business, the database is down, and then you will not have this collectible anymore. So collectibles on a Bitcoin-like system, on a decentralized system, they're not the next big thing, but it could be legitimately interesting, because a rare Pepe, well, right now with Counterparty, a rare Pepe, if the Pepe directory disappears, you will not have the image anymore. But with RGB, for example, where the image of the frog can be included inside the proof passed client side, the digital collectible will remain scarce and provable every time there is some RGB nodes running, even after years that the designer of the frog has disappeared. So it could be interesting. And the second big use case is Tether, of course. Again, you can create, you create Tether, use your own database, and now you say the regulators that you are doing KYC and AML to everybody buying or selling Tether to you. but then the secondary market is completely free and uncontrollable. Of course, the regulator will tell you, no, sorry, but no. You are to control the secondary market completely. Show me your database, and or block this person, blacklist this address, and do this and do that, or steal this Tether from WikiLeaks account into US government account. And a smart thing that somebody could say is they use a decentralized protocol instead is, sorry, but we can't. Either you shut down our business entirely, which may not be easy because maybe we are offshore, or I'm sorry, but you cannot ask me to move this Tether from here because I don't have the digital signature and I'm using an open protocol, which is Omni. Of course, with Omni, that's not working. I mean, that's working so far because Tether people are very, very smart, but it's not very sustainable because, first of all, Omni is basically only used by them, which is not a very good plausible deniability. And also, Omni is completely transparent. They can go there and say, this Omni address is for WikiLeaks, so you cannot move them, but at least you can blacklist that forever. While on RGB, that will be impossible. So with this, I mean, what I'm saying is not that this application on the Bitcoin blockchain or a system which is reusing part of the Bitcoin blockchain is going to be the next big thing. Bitcoin as an asset will be way, way more important. But unlike 99.9% of all the other tokens, rare papers and Tether-like jurisdictional arbitrage tools, they can have some reason to not use a centralized database.
I think I see a bigger trend in Bitcoin with people who used to be very skeptical of token projects and ICOs and STOs by calling them scams. Right now, they say it's fine as long as it takes place on Bitcoin. And the example which comes to mind right now is Samson Mow, who is the CSO of Blockstream, and he used to call everything a scam until he started an STO for a video game on the Liquid blockchain. And to me, it was interesting, like, okay, so it was a scam just because it was not on a Bitcoin side chain. So the reason why it was a scam was because it was on Ethereum, but not Bitcoin, right?
I mean, I'm not defending, I'm not playing devil's advocate, but I could put it like this. A typical Ethereum token has a double scamminess problem. One is the economical unsustainability of the typical token scheme. For example, the upcoin. The upcoin model doesn't make any sense. So you create an upcoin, which basically where you are selling these tokens. They don't have any kind of use except to be used as money on your platform, but only on your platform. So nobody will use them as money. People will just use real money, which is either US dollar if you're not decentralized, or Bitcoin if you are decentralized. So nobody will use them. And so you pretend they are like a share, increasing value with your project, but they are not. They are just like a dream of money that will never be. So this is a problem with the economical model. And the second problem is also the technological model, which is somehow connected because now you imagine a video game issuing, for example, World of Warcraft gold. So they have the gold, and now they sell the World of Warcraft gold to the masses in a initial gold offering. The interesting thing is that nobody will buy that because they will just say, I mean, it's just you issuing something without any value. Why? I mean, maybe I buy the gold credit just to play, but I will not invest in. I will not be scammed into investing in World of Warcraft gold. So the idea of putting that on the blockchain somehow was used in order to legitimize something that inside a central database will not have any kind of use. But the technological platforms used for that purposes are not really decentralized. I mean, all the usual comments about Ethereum is not really decentralized, and EOS is not decentralized, and so on and so on. So you are scamming the market twice. One with the token model, which is not sustainable economically, and one technologically, because you are pushing a fake pseudo decentralized system, which is actually completely centralized and so unsustainable that it mathematically cannot be used at scale. So will not Ethereum blockchain will not be here in 5 years to be used by people at scale, because it's impossible from a physical point of view to scale that kind of network as is. And indeed, they are selling the Ethereum 2.0 dream right now. So you have two scamminess, and getting rid of the second is not enough. But I think it can be an interesting endeavor. So to come back to your question, no, it's not true that whatever uses Bitcoin is not a scam anymore. If the model is a scam, it is a scam. It doesn't matter if it's done on Bitcoin. For example, if you create a Ponzi scheme, I give you your money and then take money from another level of the pyramids, and then more and then more, and you create a typical Ponzi scheme, and you do that with Ether, or you do that with Bitcoin. I mean, it's still a Ponzi scheme. Maybe with Bitcoin, you are using better technology, but it's still a Ponzi scheme. So this doesn't save tokens from being scams. It can, this kind of research can serve better very, very few niche cases in which tokens make or could make some sense economically. And also it can be a net positive on Bitcoin in general. I give you these very short arguments that are the same that I used in Lisbon when I presented my scam or my meta scam to the public. So the first argument is basically the .com argument. So in the 90s, you had the protocol wars between the internet, the actual internet, TCP/IP, and a lot of company alternatives. A little bit, you know, all these, we can list them. They all disappeared, of course. But there was a fight between the internet protocol and some kind of proprietary clone protocols. It was at the beginning of the 90s. But this fight, this war, was not happening while there also were some kind of financial interest on top of that. Then you move forward to the end of the 90s, and you have the .com bubble. The .com bubble was the idea that since e-commerce was interesting, then suddenly everything with a .com at the end of it was magic money, free for everybody. So pet.com, crazy evaluation, not even a warehouse. Everything with a .com was skyrocketing, and mostly it was a scam because there was nothing sustainable there. So my mind experiment, my thought experiment would be: would it be better if this frenzy, this .com frenzy, had taken place on top of alternatives of TCP/IP in the beginning of the 90s instead of the actual real infrastructure? I would say, I don't know, but I would say no. It would have not been better. We will not be better off, because at least the .com bubble created an ephemeral and scammy use case for the infrastructure, and the infrastructure had a growth and a stress test during the end of the 90s. Of course, economically, it didn't make any sense, so people just lost money. But as a positive byproduct of this very negative situation, the actual internet protocol was the web was used and stressed and built upon, etc. So my rhetorical and thought experiment question would be: would be the Bitcoin network worse off if all the craziness of the ICO would have taken place on top of its best practice technologies? And my honest answer is probably it will be better, a little bit better off. There is a trade-off, like it will be more associated with scams. So now when now people talks about scam tokens, Bitcoiners can say, we have nothing to do with that. In that case, we couldn't say that, but at least we will have a lot of disastrous and ephemeral and unsustainable economical activity trying to stress test and leveraging our platform, which especially at some stage of the development of technology, if it's too early, it's bad, because it's if you have too many people coming too early to build on your stuff, they are destroying you. But if they come later, you have basically the stress test, so they try what can be done on your protocol. Also, there is the Jenga effect. So the Jenga effect is that you have the base blocks of Jenga, you build on, and then to remove or to move base blocks is very, very difficult. So for Bitcoin, having, for example, billions and billions of activity on top of it, if it doesn't disrupt its fundamental feature, which is a big if, then it's actually better because, I mean, it's difficult to, for example, think about hard forking Bitcoin with the New York Agreement attack when there are billions of random tokens on top of that. It will be not easier, it will be harder. So, so my question to your original answer is no, a token doesn't, a scam token doesn't cease to be a scam just because it's on top of Bitcoin. But if I have to choose, I would rather have people issuing scams on top of reasonable technology, consolidating good standards, instead of on top of scam technologies in themselves, consolidating or spreading bad standards.
Okay, that was a long explanation, and I guess you got sidetracked with the story of the internet and protocols a little. But I was thinking right now, you are speaking of the third layer of Bitcoin, and how much of the activity on whatever the protocol is going to be called, Spectrum or something, right? How much of that is going to get validated by the main chain?
Only, so the idea is this. You have the main chain. The people using RGB without channels, without Lightning Network channel, they are moving all the asset information off chain. So on chain there is zero zero footprint of what you're doing off chain, and you can only use one Bitcoin on chain output, which can also be the output of something else. So for example, you are spending Bitcoin anyway, you are opening a Lightning channel, you are mixing in Wasabi or a joint market, you are consolidating your UTXO. You can use one of those outputs you are already using to include the commitment for the RGB part inside of that. So in practice, some people will create Bitcoin outputs only to move RGB assets with trivial amounts of Bitcoin. But eventually, what you can do with RGB is to commit an RGB asset movement inside the Bitcoin output without any kind of, so it's not like color a coin. When you give me your Bitcoin address, I create a Bitcoin transaction to your address with the specific meaning of the coloring. It's different. You give me a Bitcoin UTXO that you are going to spend anyway, and I take a Bitcoin UTXO that I'm going to spend anyway, I give you a proof, and I put the commitment of the proof inside the UTXO in order to make it not double spendable by me. So you leverage Bitcoin for double spending and nothing else. So that's pretty cool already at RGB level, which is, I mean, it is another layer too, but I mean, in order to give you the proofs, we will use something which is close to Lightning anyway, because I had to send you the proof. And then when we actually use Spectrum, what we do is, instead of sending you the asset, I create with you a channel with the asset inside the channel. And so now we can send the asset back and forth without any kind of Bitcoin base layer activity at all, because we are just leveraging the Lightning protocol. And then we can also route this asset, if it's a fungible asset, of course, we can route this after to B and C and D and E on top of this routing Lightning Network layer. So to answer your question, if we are using Spectrum properly, so the Lightning part itself, the validation effort for us on the main chain is zero. If we are using an on-chain RGB part, including to open or close a Spectrum channel, then the activity on the base layer may be zero if used really properly, because we can reuse pre-existing Bitcoin activity. But in most realistic cases, especially at the beginning, it may be something. It's not operator, so we are not consuming block space. You just have to, it's a construct called pay to contract. Basically, the idea is that you take a public key, and instead of using the public key, you tweak the public key with some kind of commitment. The same way Taproot, for example, will do that. Actually, there is a PR on GitHub to make RGB compatible with Taproot without creating any mess. I think it could be. So yeah, the main purpose of RGB project is to avoid any kind of additional workload on the Bitcoin blockchain, because that would be bad for the token users, because they will have less privacy and they will have to pay more and they will have less scalability. And it will be bad for the whole ecosystem, because the Bitcoin node user will have to sustain this thing that maybe they're not interested in. I mean, they signed off to be Bitcoin node runners, not token X node runners.
Right. I'm happy that you're not basically pulling a Satoshi dice by putting all the activity on the chain. And I think I like the idea just because if it is the way I understood it, then you're going to increase the scarcity, because people who want to access tokens, they're going to have to leverage their BTC in some sort of contract and have it frozen there for as long as they use their tokens, which means that there will be a lot of demand for Bitcoin and the supply is very limited, and there's going to be the early entrants who will take care to use their BTC as fast as they can to issue their tokens and keep them on the third layer, which means that there will be a very small supply to be transferred, right?
Well, to be fair, this is one of the possible ways to issue a token. Right now, you can. In theory, there are different ways to issue a token with RGB and Spectrum. One way would be to freeze some kind of bitcoins and issue some token in exchange, as you described, which is a good idea, because I mean, it depends. It depends on the actual reasonable architecture, economical architecture of your token. But in general, what will be increased will be the incentives to run a Bitcoin node, for example. So everybody who is trying to store or transmit or receive RGB token, they will have to run a full Bitcoin node. And possibly if they want to use Spectrum, they will have to run a full Lightning node. Which is cool. I mean, Spectrum, any Spectrum node will be a Lightning node and not the other way around. So it's an incentive to reuse more the platform. It's not necessarily an incentive in scarcity, because, for example, if I want to issue a rare paper, I issue a rare paper, I give it to you, but we're not freezing any Bitcoin. I'm just creating a frog, a collectible, and I will give it to you, and I sell it or I gift it, it doesn't matter. So RGB itself is not restricting the kind of issuance that you can do. Only the way to do that without messing up with Bitcoin and maintaining a good level of privacy and scalability.
You just gave me another idea of which I haven't thought before. So if there is an interconnection between the full Lightning node and Spectrum, then the more tokens you issue, the more activity you're going to have on the Lightning node, which means it's going to be harder to run the Lightning node, right?
No, not really. So the idea is that if you run a Spectrum node, you run a Lightning node with your channel, and you can read two kind of semantics in your channel. One is the Bitcoin semantic, and one is the token semantic. But people running a simple Lightning node, they will not have to parse anything. What may be true is that so if I want to pay you, I have to route through some people to give you a message, basically. And we are leveraging the message passing system. We're trying to leverage the message passing system of Lightning, which may be used as a general purpose message passing system. There is one bold proposal right now in order to extend the capability of messaging of Lightning. So it's true that your node may be requested to route my let's say RGB content, but I will pay you for that in Satoshis. So it's not like Bitcoin full nodes. Even if I'm not paid, I mean, if you pay him, I have to register this transaction forever on my node regardless. I have not been paid, but I will have to process it and to validate it. It's global consensus. While in Lightning, that's not the case. If I route through you, I have to pay you. If I don't route through you, my message, I don't have to pay you. And if you don't want to route my messages, you can blacklist the code for my, probably default, you will not even route it. If you want to route extra messages, you probably have to explicitly accept that and be paid in order to do that. So it's, let's say, Lightning node without Spectrum, they may be helpful to Spectrum, but not in a free riding way. They will be opt-in and compensated for any kind of help they give.
Okay, that brings the economics of the ecosystem to a whole new level, of which I haven't taught before. Because for
Yeah, of
Lightning
course.
payments, it makes sense. You just route some payments, but for something else which is on a different layer and which might have a lot more activity, if we think about Apple stocks or something like that, then I guess it will be in the interest of some users to upgrade their hard drives all the time to store all the transactions and be able to route them, right?
Yeah, we could have some centralization phenomenons, which is still, I think they are kind of fine on the second layer because there is no systemic risk. What you have at worst is a concentration. For example, there is another problem. So in the base layer, you pay for block space. And when you want to put meta protocols, you have to pay even more, and so you have the conflict. On the second layer, you don't have the conflict for block space. What you have is the conflict for liquidity, because if I want to send, if I want to send $1 million of Bitcoin to somebody on base layer, it doesn't matter it's $1 million. All that matters is the size of the transaction. But if I want to send $1 million on Lightning, then I don't have any block space constraint anymore, but I have a lot of liquidity constraint because I'm consuming a lot of liquidity of my routers. So this is true for Bitcoin. This will be even worse, way worse for tokens. So if I cannot find a lot of Bitcoin liquidity from me to you, probably I will be able to find even less and less and less liquidity for Apple shares from me to you. So we are thinking about a possible solution, which now I'm going to use a super scammy word. We are thinking about something like a DEX, decentralized exchange, which works a little bit like this. So I have a Spectrum channel with you, which is enabled to move around Apple share. Let's use a more realistic example. We are able to move around Tether US dollar between me and you. Now I want to pay Charlie. Charlie has a Tether enabled Spectrum channel with Bob, but Bob doesn't have. You are Alice. Bob doesn't have any Spectrum channel with you. So I have liquidity to you. Bob has liquidity to Charlie, but you don't have liquidity to Bob with Tether. You just have liquidity to Bitcoin. So the way Spectrum DEX should work is that when you publish your channel with me, you also say that you are available to route through a Bitcoin channel if I give you, what I give you is, I give you $1 Tether dollar if you give the Bitcoin equivalent of $1 Tether dollar, which is 0.00 something Bitcoin, to Charlie, asking him to give the 0.000, to give $1 Tether equivalent to okay, again, you have to give the Bitcoin to Bob, and he will give the Tether to Charlie. So I can route Tether passing through Bitcoin, hoping through Bitcoin liquidity, which is something that can create a lot of centralization. For example, somebody with a lot of Tether liquidity will probably become a big, let's say, hub of liquidity, which again is probably fine. Second layer centralization is less a systemic risk, and it's more of a particular risk, a local risk of more like an exchange. The worst case scenario, the big node you are using, it will close down with some kind of potential losses.
So let's say that I'm on Spectrum on the third layer, and I close the channel, then I get on Lightning, I close the channel. And let's say that on that third layer, I had an Apple stock. Do I get the equivalent of that Apple stock in Bitcoin if I settle the transaction?
Not by definition. It would be very cool, but that's not how the protocol. That's not a guarantee of the protocol. That strictly depends of the way the way Apple is implementing the token. I would say that in a very good. I mean, if Apple is implementing the crypto shares in a good way, then the answer must be yes. Right now, as far as Spectrum is involved, when you close the Spectrum channel, you will have an on-chain transaction with some Apple shares on the RGB level. So you will have the proof that you have the RGB, and you will have the anti-double spending transaction that proves that you have not been double spended. So now you have to send this token back to Apple, and Apple, in theory, should give you back the Bitcoin. Of course, there are some trustless ways to convert Bitcoin to something and something to Bitcoin, but they all need some kind of, I mean, they're not trustless. There are some trust minimized ways. For example, let's think about, so the problem is that Apple doesn't even need to do that. But think about a gambling site, for example, an unregulated gambling site. So this gambling site want to issue shares, or better, royalties, that give you pro quota a fraction of the fees of all the gambling activity. So what they can do is to set up an HSM, some kind of secure computation, secure hardware, and they basically put a Bitcoin keys on that, and they say all the fees are coming to this address. And when you come to me to get some Bitcoin from this address, you will have to show me your RGB proof, and my HSM will parse your RGB proof and give you back exactly the number of Bitcoin that your proof entails you to. And this is trust minimized because it is an HSM, and I could tamper, but it's difficult, and I could censor it for sure. So there are a lot of subtle ways to minimize the trust, but RGB is not a solution to that fundamental problem. If we had that solution, we will basically have a decentralized stock market, but we don't. We still need a centralized party to give you what the token gives you the right to ask, to demand for.
So the short version of this is that the third layer is not really permissionless, and you sign some kind of conditional contract with some kind of third party in order for you to settle. And you have all these conditions which have to be fulfilled before you can get back to the main chain.
So it's not really trustless more than, I mean, the representation level is trustless and permissionless. Everybody can issue tokens, and everybody can use these tokens. But the conversion between these tokens and real value, that's still a very centralized and those not permissionless process. So it's not really, so second layer and first layer is more like a technical description of where the promise is going. So so again, I'm Tether. So you give me $1 via bank wire, I give you one Tether US dollar. Spectrum describes where this Tether US dollar is. And it does that in a very good way because it's not traceable. It's very, very high privacy, very high, is not censorable by miners, is not blacklistable. So it's a good way to move around this Tether. But then when you give me the Tether and you ask me, give me back your via wire transfer the original dollar, then it's still super centralized, and I can just say no. And Spectrum and RGB do not really help with this. They help because if the regulator comes to me and they subpoena me and they ask me, you have to stop all the Tether moving through WikiLeaks account or Gab account or whatever, I can really answer in good faith, sorry, I don't know what you're talking about. When somebody will come back to me with a Tether, I will be able to validate it and to pay them back. But I don't know where they have been because with Spectrum, everything is off chain. So I don't really know where the token is at any moment in time, which is not something they can really say with Omni. So in this regard, it will be a huge improvement.
Which explains why Bitfinex is interested in investing in this project.
Precisely, precisely. I'm very happy that there is a realistic good case which is driving. I mean, many people is interested in using this kind of stuff for random kind of tokens. In this specific example, I'm also kind of happy of the type of tokens. Of course, as I said a lot of time to my Bitfinex friend as well, I'm still very skeptical about Tether sustainability long term in general, because I mean, even if Tether doesn't do fractional reserves, the banks that are keeping the dollars for Tether, they will probably do fractional reserves. And even if they don't do that, what they have is not like paper cash in the cavo. They will have probably some kind of government bond of some Caribbean government. So there is a lot of concatenated risk. But for the things it is meant to do, which is basically routing around KYC limitation in Bitcoin trading, Tether dollar is great, and I'm happy if they can use a more private and reliable alternative to Omni.
That sounds very complicated and it might take a lot of time to develop, right? When do you think this can be released?
2 weeks. No, yeah, you're right. I'm pessimistic about that. Some of the companies involved, they made some very optimistic forecasts, like end of this year we will have some of these companies token on RGB. I mean, on-chain RGB is pretty much done. So the commitment of the proof in pay to contract is basically a problem solved. What we are working on right now is how to formalize so we need basically to formalize the specification more so that people can build the wallets better and faster. And we have to finalize an example, a reference wallet that can do that. The important part, though, the Spectrum part on top of Lightning Network is still very messy, because Lightning Network itself is still very early. So we are there is one C Lightning fork which is implementing Spectrum as a prototype, but it's still super early stage, and I'm skeptical it will be. I hope that in 2020 we will be able to see a couple of good use cases with a couple of wallets supporting Spectrum full strength.
I think it was the same with Lightning. The scaling debate has been around for a long time. And before Lightning, there were a lot of similar implementations. And I know that Peter Todd had a model of his own in 2014 or something. And it took a long time before it got deployed on the main chain in December 2017. So I guess you'd rather have a robust kind of technology that is still going to be as reckless as Lightning is right now, and people will still lose some of their assets or not know how to use them properly and make stupid mistakes for a while.
Yeah, absolutely. Yeah, what you're referring to with Peter is the hub and spoke model that he was working on way before Lightning. The good thing in this comparison is that Lightning Network, in order to work properly, needed a malleability fix, so it basically needed SegWit, and we had to wait for SegWit activation in order to really start to play with Lightning in the mainnet. RGB and Spectrum do not need any kind of consensus change. So it's a completely independent project. On the other way around, Lightning Network was needed for something super important, which is Bitcoin. So there was a lot of interest on Lightning Network. RGB and Spectrum, they are needed for something which is, honestly speaking, way less important. They are niche cases. I'm super happy to experiment with these niche cases, also because as a consequence, as I told you before, the fundamental idea of client-side validation potentially in future could be an interesting idea for Bitcoin itself. I don't know how, maybe a sidechain, maybe, but it's an interesting alternative vision. So the original Peter Todd vision. And but actually there was also in Bitcoin Talk, I sent it to Peter a few months ago. There is one thread in which Satoshi himself is tinkering with this idea. He's saying, but what if instead of just confirming the validity on the blocks, the miners could just mine everything, and we will confirm the proofs by directly moving the proofs peer-to-peer. So there was Satoshi himself thinking about this paradigm, and I think that it's very interesting because even if, so assume the worst case scenario, RGB is in production and nobody really cares. Tether is moving to something else, and rare papers, they're not the thing anymore, and nobody uses RGB. So it's still very nice to have work on that, because we have two things. First, we experimented with the design of client-side validation itself, which may be something useful for Bitcoin someday at some level. We don't know. Second, the kind of things that RGB needs to work are a always online mechanism, so something similar to watchtowers. You need servers that can be there for you to receive your proof when you're not there in a trustless way. So you need some kind of watchtower design, and then you need a backup design. And these two things, they are super important for Lightning as well. So what I hope is that Lightning Network will eventually use some features that we develop for RGB, or we will just use and test and improve Lightning Network features in order to do that on RGB. So it's a win-win, really, even if the token themselves doesn't end up making a lot of sense.
I think the description that you made of Satoshi tinkering with different ideas on how transactions can be validated is taken from the BitGold proposal, where they had a settlement layer and the commerce layer.
It's possible. So the BitGold, unless you're giving up a huge scoop, BitGold is not Satoshi yet. It's just Nick Szabo. But I think that so not sure the same thing. I will have to check. What I'm discussing about in Bitcoin Talk is exactly what Peter Todd is discussing with client-side validation. In order to have a good presentation on this idea, there is the Peter Todd's talk in Scaling Bitcoin Milan 2016. He presented that as an idea, and the idea is again, miners will include everything which pays a valid fee will be included, even invalid transactions, and it will not be us expecting miners to include valid transaction. Among the transactions in the blocks, each one paying the fees, we will only accept the ones that we know are valid because we received off-band the integrity proof of the ownership transmissions. While I think that BitGold was trying to do something a little bit more complex, if I'm not wrong, I may be wrong. They were trying to replace the difficulty adjustment idea by Satoshi, because the problem with proof of work, the problem also discussed in Hashcash and reusable proof of work by Alfini, is that proof of work is easy to inflate. It's not hard money, because the more the proof of work, the more the Hashcash has value, the more people will start to do proof of work, and so there will be basically a very elastic supply when the demand grows. So what they were imagining to mitigate this problem was to have a first, let's say, a primary market of proof of work production, and the secondary market of Hashcash or reusable proof of work exchange with some kind of different layers of. So if I'm not wrong, I think that the BitGold secondary market was connected to these more than to that.
Okay. I feel like you have said quite a lot, and there's a lot of information to process. We have only scratched the surface in some regard, but I think the ultimate judge will be the community itself and people like Hadlonat. He told me when I spoke to him a couple of months ago when he returned that you are his idol, basically, and his favorite European Bitcoiner. And that's going to be interesting after he sees this interview and you explain a third layer, of which you agree that it can create scams on Bitcoin, if he still has this high opinion of you.
I hope so. The opinion is reciprocal. I also really respect him. One of the coolest things that we have seen in this year was the Lightning Torch, and then the Craig Wright attack on him with the Will Odlnaut meme apocalypse. It was one of the coolest at social and human level events on Bitcoin, and we owe it to him. So I'm more than happy to be his friend. I'm more than proud to be his friend, and I hope he will still be my friend after I enable a lot of scams on top of Bitcoin.
Okay, you're so open about it.
Yeah. This is the RGB is an honest meta scam. We're not scamming anybody, but we're giving the tools to a lot of people to scam you on the Bitcoin blockchain.
Sounds like Ethereum, but on Bitcoin.
No, it's way. I mean, it's not that meta scammy. It's way less scammy. Less bad. We have some buzzwords like DEX and client side, but very few. Like we have a couple of buzzwords, so way less than Ethereum. And what we can allow is basically to leverage Bitcoin untitled spending in order to move your independent ownership protocol. So we try to stay humble, and we're not giving away any RGB token at the end of this interview.
Grazie per tutto, Giacomo. Ci vediamo a dopo.
Grazie a te, alla prossima. Bye.